Good morning, everyone. It's Ben Buckner and Dan Bossy with Ag Resource Company in Chicago. It's Wednesday, April 23rd, and we've got markets that are mixed, but mostly lower. It does look like the financial markets have found some footing. The Trump administration a bit less hawkish today, both on Chinese trade issues and also replacing Fed Chairman Jerome Powell. So we've got a little bit of certainty. Dow futures are up 700 points. The ag markets, however, are extracting a little bit of premium, and we've kind of got to that point of the year where premium is warranted, but we're kind of starting to look forward to what supplies are kind of July, August onward. And I think the story so far this week has been, normal planting progress last week, probably normal planting progress in the central U.S. for the next 2 weeks. Don't have a lot of new weather threats, and the Brazilian monsoon may just continue into the first week of May, which is kind of abnormal and is adding to corn yield potential there. So good morning, Dan. What do you think this morning about the ag space?
Well, I think you're right, Ben. I think the market's all about extracting weather premium. Let's move ahead here and talk a little bit about what Trump said on China, because the question we should all have in our minds is, are we going to have a China rally related to the potential of another phase one deal? We've been saying that if you did get a phase one deal, it would completely change the ag markets from bearish to bullish. Now, again, remembering back to phase one, which was signed in January of 2020, the Chinese pledged to buy 35 to 40 billion dollars of U.S. ag goods annually. And so if China were to do that again, you'd look at China coming back for large amounts of corn, soybeans, and even potentially wheat. Meat products and all of that would give agriculture a bullish jolt in the arm. However, the Trump administration has been saying this for some period of time now, and I think the ag markets are kind of tiring. Trump's been saying since before he was inaugurated president, I've got this great relationship with President Xi. We're going to do a trade deal. But, importantly, the Chinese haven't called Washington. And so when Beijing calls Washington and we get some of these high-level talks happening, I think the markets will respond. But today, that's just not happening. And I think it's a problem as we go forward because it's kind of like the boy crying wolf. We don't know what to believe. And at the moment, the markets won't believe it until they see a response from the Chinese. That being said, I do believe that the focus of the markets is on weather. On the left hand side of the page here, you see rainfall forecasts from the EU weather model for the next 10 days. There will be planning windows around this rain. Key to me will be how much rain falls across the Western Plains in the next 48 hours. But if you look at the other map there, which is the 10 to 15 day forecast map, notice that broad areas of the Midwest will be dry. So I think all of us, to your point, Ben, are going to be looking at normal planning progress, at least for the next 2 to 3 weeks. And if that's the case, the market does need to be extracting weather premium. Along with this dry weather will be, of course, warm temperatures. And so it's that combination of a fast start, getting seed in the ground and having it germinate and get its crops established that is so important here. Any below normal temperatures, they hovered across the northern sections of Canada. We're going to be warm and dry. We're going to be, frequent showers nearby and then warm and dry in the 10 to 15 day period. If I look at the change in corn acreage in June and then model it back to when we have these favorable planning timeframes, we at Ag Resource would be thinking about a U.S. Corn seedings number in the June estimate over 96 million acres. And so it's not only getting seed in the ground, we're probably going to find extra acres. And the northern plains in particular is going to be fast planting. And that's an area that, historically has been the prevent plant acres. And so our view is that U.S. corn acres will come in over 96 million. And with that, if you think about where the markets are heading or what maybe December corn prices will do here, December corn has rolled over. We kind of peaked against 470. I would tell you that if you look at this graphic here, taking weather premium out of price, we're probably heading back to that 435, give or take a nickel. So that would be back against the, let's call it late March, early April lows. And it also would tell us that before we reach maybe a final harvest target of $3.70 to $4, is that corn will hold maybe 35 to 45 cents of weather premium in price, just in case of abnormal summer weather. So Ben, if I look at it, corn still has, 20 cents of downside risk nearby before the end of planting. Thereafter, it all depends on what summer weather patterns will be. But without adverse weather, the corn market's in a bearish trend. And I think that's what's important here going forward.
Yeah, so we're kind of checking off boxes with respect to supply risk, and the planting box I think should probably be checked off. It does look pretty good. And so this week too, we were kind of doing lots of work to quantify all this at Ag Resource. So stay tuned for a lot of really good research. We're putting a lot of man hours in Europe and South America and the US. What does the new crop global balance sheet look like for corn, wheat, and soybeans? Where does US exports fit into that puzzle? Will they be higher or lower? Then what does that mean for stocks? What does that mean for price? So that's all coming in the next 3, 4, 5 days. So stay tuned for that. Download the app. $1 gets you in for access for 30 full days. Take all kinds of feedback. Let us know what you think. So, Dan, you got anything else in the markets today?
No. I wish everybody a good day. There will be rallies or bounces along the way with Trump. The question is, what do we do with it? And for now, as long as we don't have a weather problem in the U.S., we're selling rallies with one eye in China. So, Ben, that's kind of the message we leave with clients. Okay.
Well, thanks for watching, everyone. Good luck in the markets today, and we'll see you again tomorrow morning.